Hey everyone, it's Mozart here. So, yesterday was quite a red day with a sharp shift in the Federal Reserve's rhetoric, and that obviously affected crypto as well. But it was one of the historically worst days, especially for the Dow Jones, which, if I'm not mistaken, hasn't had a daily candle this strong since around 1970, 1974, or 1976, I can't quite remember. That's true for the Nasdaq, which fell more than 4% at its peak. Well, I'm not even talking about the Russell 2000, which at its peak fell by more than 5%, almost 6. The dollar index also shot up. So, what's the point of all this? So, this deal, yesterday both limit orders were bought out. I also duplicated them in the Telegram channel. 1787 for Bitcoin and the limit order for Ether was 3766. They all paid off and I shut them down. So, I posted in the Telegram channel that I was closing them. So, I closed Bitcoin with a 1% profit and Ethereum with a 2% loss. In total, it ended up being a 1% loss, but it's just a minor loss. You could say we broke even. Why I will explain now. Again, I closed them only in the Telegram channel, rebalance, add, and partially fix. This is only in the Telegram channel. On YouTube, I can't make videos so quickly to duplicate all my actions on YouTube. So, if you don't want to miss out on any position updates or other trades on coins, make sure to subscribe to my Telegram channel. The link is right in the description below this video. So, what don't I like about Bitcoin? What don't I like? We flew out of the green ascending channel. That's not a very good sign. Despite the fact that we are still trading above all moving averages, we still flew out of it. And technically it happens often enough, not always, I'll say right away, but often enough that we somehow retest it. And we could head down again, creating another wave. So, hypothetically, we might retest from the current levels, maybe even around $104, $100, or $5,000, and then everyone will be saying, why didn't you wait for those 105? You could have at least grabbed a 4% profit. But believe me, it's impossible to predict. It might not happen, and we could just as easily break today's low. Plus, there's some support we can draw within this kind of channel. It used to be like this, and now it's like that. So, that's how it's going. It was like this before, it is like this now. So, that's how it's going. There are a lot of channels forming, but it's just sideways movement. There's nothing we can do about it. There will always be plenty of channels about this kind of format. And now we're trying to break out of this channel. We're testing its upper boundary. We're breaking out. And that's about Bitcoin. Daily chart, 30 MA support, retest lower boundary, 50 MA. Once again, we touched it perfectly. And everything seems clear here, but there's still room under oil for a retest of the lower boundary of the white upward channel, and possibly even a retest of the 50 moving average in some way. Because we haven't tested the 50 moving average for a long time. Not since November. We haven't tested it since the 10th of October. Since the 11th of October. We haven't tested the 50 yet. Basically, there's a chance to retest the 50. How so? Let's go back to the 4-hour chart. 4-hour chart. We've got a bit of a dodgy situation here. We're stuck between the 50 and 100 moving averages. I call it a buffer zone here, and I don't like trading in it and I don't want to. So, I got out. So, it's always a 50 to 50 here. Test the 100 MA, or hit the 50 and drop to 200. We could hit the 50 and then head down to test the 200. It's always a 50 to 50 here. The buffer zone here is a zone of uncertainty. After strong movements, and yesterday there was a strong movement on Powell, there will always be cuts here. So, I don't want to get involved in it. A retest of the 200 moving average from below. It's likely. It's likely. And if we look at bull markets, how they move, then in general sometimes, the 4-hour period tests the 200 white moving average. That happens. We've already tried to test it. On the Korean sell-off on December 5th, we didn't reach it. We didn't get any more plums on December 9th. And now it's possible we might hit it. The 200 moving average is roughly around the mark of about $98,000. Our low was at 98,744. That is, there's one at 98,744. You can't really break that low significantly. You can update it, but not by much. It might still pull up like that. Let's say we break through like this, and then we pop up like that. This kind of scenario is generally viable. And then we'll pop up to the top. This is an option. It is generally viable. And I'll say it again. It happens periodically in bullish markets. That is, in every bull market there are at least one or two tests of the 200's moving average on a 4-hour basis. So, we don't even have to look far. Let's rewind to March and see how it went. The first movement was on the rumors of the Bitcoin ETF approval. We were moving along, testing the 50 and then the 100 moving average, and then we tested the 200 moving average once, twice, and then we had the final push, followed by a correction on the facts. After that, we had the March pump, where we tested it once, twice, and then shot up. After that, it was the Iranian Strait situation, and then we were off for a long time in 2021. A very similar picture. A very similar picture in 2021. So even. In 2021, during the strongest pumps, which were stronger than now, we went up a couple of times around it, around the 200. Moving on, we're continuing to rise. A drop here of about 30 to 35%. We tested it once, then went up the second time. The 200, then we broke through, but it was a false move upwards. So you understand that the 200 on the 4-hour chart really likes to hold the price. Very, either just a simple touch or with a slight break through it. That's why I drew this kind of format, like, well, maybe some sort of breakout like this. If we take this scenario into account, it's actually the lower boundary of the white ascending channel and somewhere around the marks of about 95, 96, 98. So, in this range, basically, all of this here. So, in this range. Based on this, let's set a new limit order. The situation with altcoins is a bit different. We're already at the 200 moving average, we've already broken through it, so we can't drop down too much here. What do I allow for altcoins? TotalTree is testing $1 trillion, as we mentioned in previous videos. Right now, during the day, it's testing it from the bottom up. Yesterday, there was quite a significant drop. This double top has fully played out with a margin, we've worked it out. And now, it's a crucial moment. For altcoins, we can drop down below 0.02 again, but not by much. We really can't drop too much. I might even allow for the possibility that after yesterday's drop, which was quite strong, we could update this low. We'll slightly update the low from December 10th. I allow for it and I warn you, it could happen straight away. Considering what's happening right now, we might not update it, I don't know, but if we do update it, I'll buy more altcoins here. And then, most likely, there'll be some sort of turnaround upwards. Just like that. Well, either we won't update this low, we'll just hang around here and then turn upwards. So for now, that's the picture. The most important thing is that the weekly candle cannot close below the $930 billion mark. That wouldn't be very good, it would be quite dangerous. I've mentioned this more than once, and I also wrote about it in the Telegram channel yesterday because, in that case, we could effectively close a double top, and that would pretty much wipe everything out. Plus, the correction in this case would be 32% for altcoins, which essentially means a reversal for total 3, at least in the medium term. That's what I mean. The same goes for the 200 moving average and total 3. We worked with it in March just the same. The same goes for the 200 moving average and total 3. We worked with it just like that back in March. Well, there it was, yes, that touch. It was somewhere around here in March. Here we've already broken through it, hung around a bit, but still bounced back. And after that, there was the Iranian drop in April. Moving on. At the start of the year, at the end of 23, we also rarely came to the 200 moving average. We tested it once here, then we had a false breakout, came out, and then there was a strong correction following the acceptance of the Bitcoin ETF, but that was already at the end of January. That was the end of January. The same can be seen at 21 years old, But no, it doesn't give me more candles, or it does. Altcoins can't drop much lower. If we fall below, I'll buy more. Start taking positions here. If it closes on Monday below this level, I'll exit with a stop. So, if I repeat myself, if we drop below and update this low, I'll buy more here. This will be the perfect point to add to my position. It's a really good spot, although you could already start taking positions here. And just add more if you want to go long, like I am. Well, if it closes on Monday below this level, yeah, I'll have to exit with a stop. But for now, the current situation is leaning towards a long. Moreover, if you look at some more global charts for altcoins, there's the Fibonacci correction. Here we are testing that very trillion from the top down. The current correction has already reached nearly 20% for total 3. Well, I don't know, even in December, January 23, it was 18.5%. Next, in 2021, there were similar corrections, but the liquidity was different there. You can't count it like that. The money was different there, and it was. Overall, altcoins were worth different money. Back then, the market cap just wasn't as sensitive as it is now. Aha! Significant corrections even in March reached around 17%, with some altcoins dropping by 16%. There were also notable corrections in January, around 17 to 18%, but all of that was still lower than what we've seen recently, which was basically a correction over just 2 weeks. So, there should be a bounce point coming up quite soon. That's regarding altcoins. I'll give you the entry points later, at the end of this video. Now, let's take a look at the blockchain. So, regarding the blockchain, yesterday the liquidations for Bitcoin alone were at $44 million, not counting the leverage. Next, the total liquidations, yesterday it was at $781 million in a day, over 24 hours. That's a lot, but it's less than, for example, on December 5th during the Korean market turmoil. And even less than on December 9th, though it's still quite a bit, almost $800 million, though it's still quite a bit, nearly $800 million, there was a major correction, though it's still quite a bit, nearly $800 million, there was a major correction. Next, the funding has eased off even more. On some exchanges, it has already gone into negative territory. And if we take a look, again, this is the support line, and I'm saying that from the current levels, I'm expecting a reversal or a serious bounce. Even if there's a spike, with a new low from December 9th for altcoins. Here's the funding, it's eased off. Here's the line. This is the support in bullish markets. 1, 2. Here's March, February, March 24th of this month. This is already a sideways market. The funding is eased off. Moving on. Why could there be an additional spike? This is the short-term traders locking in losses. On the hourly chart with an average over 6 hours. I love using this kind of chart, and I also like the 12-hour one. So there was some kind of loss here. A bit of a loss, but it's not the most extreme. It's average across the board. It's been higher at times. This is our chart from March 24th. There was a similar loss during the corrections not long ago. Right now, it's the same kind of loss. Next, there was a loss during the correction in November. At the beginning of November, well, and in the sideways market, yes, those corrections were stronger. There was a strong correction here, meaning there were bigger losses. But considering that this is the first wave of losses, we can basically draw a convergence, which is when the price makes a new low, and the indicator makes a new peak that's lower than the previous one. Sorry, I meant a new low that's higher than the previous one. Moving on, by the way, what can we look at with this indicator? Where's our STH Plus cohort then? There it is. I also showed it in yesterday's video that they can go into losses before a reversal. Let's have a look. Yeah, they've practically gone into the red. So, as of yesterday's close, it was $100,000, then the price dropped below that, and they went into a net loss. So, the divergences are starting to play out, this little one here. Next, regarding the percentage of positions in profit, so this is the bull market line at 95%, which usually acts as support. In the short term, we sometimes drop below it, like what happened on December 9th, but often it acts as support that holds back the floods. However, here we have an hourly cut. So we can reverse through, again, convergence. So, the price makes a new low that's lower than the previous one, while the indicator makes a new low that's higher than the previous one. That's it, and we're reversing. So, there might be a new low. This happens quite often, all the time, especially on the hourly chart. There are loads of examples here. Loads of examples. Maybe it's just a matter of looking for them. It's quite simple. For example, it was like this here, and over here we were lower down, then we turned sharply upwards. Next, it's the same thing, just the so-called adjusted positions in profit, taking into account that we cut out all the bitcoins older than 7 years, considering them lost, forgotten, and basically completely vanished from the market. Most likely, that's the case. Here the picture is the same, just the adjusted positions in profit have dropped not to 94%, but to 92%, which is about 2% more. 2.92%, that's about 2% more. 2% more. So, according to the quick indicators in the blockchain, it seems we've reached the maximum point of correction here, but there's still some room left to push down, update this low, and clear out the remaining liquidity from below. So, somewhere around 95, 96, 98 to head down, there, and then quickly turn back. I don't know if it will be like it was in 2024 at the beginning when Bitcoin was accepted. It might be possible, but it has to be after Trump's inauguration. Only when it becomes clear what his promises are regarding the actual reserves for Bitcoin. Especially after Powell's comments yesterday saying that he's not really aware of it and doesn't plan to create that reserve. That's why crypto reacted so strongly, not just because of the more hawkish rhetoric from the Fed. And let's move on to the entry points. 2 new entry points, 96 to 990, a golden mean test of the lower boundary of the white ascending channel. The new 96 to 990, well here, basically, I just took some kind of golden mean. This is either a test of the lower boundary of this white ascending channel that we talked about. There might be a retest of the 50 moving average, and then we'll break through it again with some margin. Plus, on the 4-hour chart, this corresponds to a false breakout of that 200 moving average. So, the situation I just showed you in the technical analysis could also happen. And plus, on the 4-hour chart, this corresponds to a false breakout of that 200 moving average. So, the situation I just showed you in the technical analysis could also happen. Stop. You see red lines on the screen. Trade 1:1. Act on limit. Stop unchanged. The stop is the same as before, the conditions are unchanged. We close if the stop is hit, but only if the candle, in this case red, because crypto trades 24/7, closes below the stop line. Not just touches it, but actually closes below the stop line on a daily candle. Now, moving on to Ethereum, it's not just about touching it, it has to actually close below the stop line on a daily candle. Now, moving on to Ethereum, a very similar picture, just with its own parameters. It's the same test of the lower boundary of its own white ascending channel. Right here. Possible loyalty update from December 9th. Possible touch of the 50 moving average. Potential breakout tonight. Red lines, stop, green, take profit. Trades shared on Telegram, updates to follow. Or, stop, red lines on the chart, take, green lines on the chart. I'll duplicate these trades in the Telegram channel later, and I'll keep track of them there, letting you know what I'm doing with them, whether I'm scaling down, closing, and so on. So let me remind you, the link to the Telegram channel is in the description under this video. That's it. Thanks, everyone. Here's the analysis. I hope I was able to help you in some way. It was big, but from my point of view, quite useful. And I hope now you have a better understanding of how to proceed from here. But, of course, I'm not leaving you, and as soon as anything changes, I'll record a new analysis and first of all, I'll post it in the Telegram channel. Thanks. Mozart signing off. Have a great day. Bye.